Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session. And, Justin, headed into today, it seems like investors were kind of holding their breath, waiting to see what would happen with the Fed decision today. Maybe not perhaps what the decision for today's rate hike would be, but what Powell would say about the future. And it seems like there was a breath of relief with the strong rally we saw into the close.
Yeah, that immediately started right during the press conference. So we'll talk a little bit about that. And then we'll also talk about some of the stocks that were looking interesting today, including ExxonMobil, which we've been talking about on IBD Live for a while, Mattel, and also General Dynamics in the defense area.
All right, well, we'll get to analyzing those three stocks. But first, let's take a look at the major indexes. The NASDAQ, by the end of the day, up 3.2%. We also had the S&P 500 up 3%, the Dow up 2.8%, and the Russell 2000 up 2.7%. So very strong gains across the board here, Justin, as we are now in day 3 of a rally attempt.
Yes, but it really, in order to tell the full picture here, you really have to look at the intraday chart. So you can go to a 30-minute chart or even a lower, but this shows it exactly what was going on. And you can just kind of highlight where 11 o'clock Pacific time, 2 o'clock Eastern time happened. There was a lot of back and forth. That's fairly typical after a Fed announcement. I think the 50 basis points that was baked in, everyone was expecting that. I think it was a 99% probability. But what was really interesting was during the press conference that started just a half an hour later, and Powell said a few things that I think people took note of. He did say that, look, he kind of made an appeal to the American people, recognizing, hey, there's inflation, and I know that's horrible and it's not easy, and we're adapting to it. So he made that initial appeal, but he said how strong the economy is, the balance sheets for companies, the balance sheets for households, the savings rates, all of these things. And that's why he said he believes that tightening is something where there's still that potential for a soft landing. It's still something that's achievable. And what was even more impactful, I think, is when he said not actively considering 75 basis points. And that's where it was off to the races. Right. A lot of people were looking at the potential for aggressive tightening to the point of 75 basis point hikes. And when he took that off the table, saying, hey, this is not being actively considered right now, I think that was a big, huge sigh of relief. Now, he did say, look, there's some 50 basis point hikes in our future here, but we could probably handle a couple of those, and then there's no August meeting, more data's in, and by September, we can kind of see where we're at. But there's still that kind of thinking of a lot of hikes on the way, but I think the way he positioned it, and I think he's been very good about telegraphing what they're doing. I think it was something that a lot of people were taking note of and looking at it in a very positive way. So if you look at the 10-year Treasury yield, we often take a look at 0TNX in MarketSmith. Here again, you can see the intraday move. If you I'm not sure if we can show that, but yeah, look at what happened. Because again, the 10-year Treasury yield was kind of reaching that 3% level, which is the target that a lot of people were thinking of for the Fed funds rate. It was hitting that level earlier, and once those comments came out, it was pretty dramatic drop in the yield. So Treasuries, of course, have an inverse relationship. Treasuries were rising, the yield was falling.
Exactly. And Justin, you mentioned this notion of a soft landing that a lot of people have talked about, threading the needle, another way of saying that. And so it seems like, even though we are seeing, some pretty historic measures here in terms of hiking rates, it is, at least at this time, given the market reaction, the expectation that these measures are not going to push the U.S. economy into a recession.
Well, I think people are looking at it as these measures are necessary, and that's basically what Powell was saying. Is inflation is at such a level, we have to do something. This is, I think he was almost making sure that the American people realize that this is something that has to be done because of inflation at the level, and recognizing that it can't sustain itself there. Now, he also mentioned that, look, there's a lot of things that are going into this. And the tools that the Fed has at their disposal are more on the demand side. They're not on the supply side, and we're dealing with a lot of supply issues. He mentioned Ukraine. What was that? What's that doing to the supply issues that were already in trouble? What is the shutdown in China doing, to the supply issues that were already in trouble? So he made it very clear that, the actions that the Fed is taking is on the demand side. That's all they can do. But there are challenges. He was very, open about that. But I think, again, it left people hopeful. And with this out of the way, I think people don't have that kind of anxiety of what's he going to say? How hawkish is this going to be? I think this was a lot better than a lot of people were expecting.
And so a strong day across the board, and with the move today by the S&P 500, that warranted adding a little bit of market exposure to both swing trader and leaderboard.
Yeah, just a little bit. Again, we don't have a follow through day yet, so be very clear. This doesn't necessarily mean we're going up tomorrow, and it doesn't necessarily mean we're even going to get a follow-through day. But it's one of those things where a lot of times we're going to kind of ease ourselves in, ease ourselves out. And so, given the reaction today, it seemed like a good opportunity to just put a little bit on, because again, we have very low exposure right now. That's been one of the ways Swing Trader has been outperforming, and how Leaderboard outperformed last month as well. So it's that low exposure that's been helping us quite a bit, kind of get a gap above the S&P 500. So we don't want to lose ground. If the S&P 500 moves very quickly, we want to make sure that we kind of keep that gap of outperformance.
That makes sense. Okay, well, let's take a look at some setups and potentially actionable names on our radar, including ExxonMobil, which really strengthened throughout the session after testing a buy point. When we were looking at it this morning, it was looking like it was hitting resistance just under that 90 level, but strength by the end of the day, up almost 4% here, and some nice volume behind the move today, Justin.
Yeah, and look, for as much as there was a lot of back and forth action in the indexes today and in a lot of stocks, energy really was strong from the get-go. It just got stronger, but energy was really where it was at. And we're talking about that 90 level on ExxonMobil. Now, Swing Trader, we got in a little bit earlier. We took an early entry, so we already had a cushion. We actually took some off into the strength as we crossed that 90 level just to take our first third off. But this is looking good. Now, this 90 level has been cleared. This is a legitimate cup with handle. And again, you're talking about one of the strongest areas in the market right now. The energy, the oil, the natural gas, all of those, that's where all of the setups are. If you want to look for relative strength lines that are in new high ground, that's pretty much where you're going to be finding them. So ExxonMobil, of course, is one of the behemoths there. And the fact that it crossed 90, I think, is a good entry as a position trade. And again, we already have it on as a swing trade.
Exactly. And you mentioned the relative strength line. We have that blue dot on the weekly, which signals that relative strength at a new high as a stock is forming a base or breaking out. So just really underscoring that market outperformance, as you mentioned, Justin. And if investors want to screen for that, that's a great way to uncover all of the names likely concentrated in this area of the market, as you're mentioning, Justin, to be able to uncover more watch list worthy and actionable names.
Yes, and it's especially important when you see the relative strength line precede the price into new highs. That's telling you you've potentially got something special.
Exactly. Okay, and next on our list, let's take a look at Mattel, MAT. Strong week here. RS line blue dot as well, up about 11% so far in the week. Flipping on over to a daily chart. So adding to its breakout yesterday over a key level, and this was a swing trade as well.
Yeah. So now here, my warning is going to be careful of buying extended. So for Swing Trader, what we did was we noted that nice move that it had on earnings. And look, there are some buyout rumors that they're looking at potentially looking for a sale. They are dealing with some private equity firms. So that is something that is out there, news that is out there. But what I liked about this was that tight action that happened right after that earnings report. And then as soon as it was crossing that 25 level, that's where it looked really interesting to us, and we started putting it on Swing Trader. And then we got our normal breakout, right? That 25.81 10 cents above the prior high is where you would put the buy point. You got above that, but now you've got a nice follow-up, which is good, but
Mm-hmm.
you have to be very careful, especially in this market, of buying stocks that are extended. So be very careful, try and get those early entries as much as possible, because once you have that cushion, it's much easier to handle. But let's say this pulls back even down to 25.50 or something like that. That would be very normal action. But if you're buying it at 27, it's going to be a lot more difficult for
Mm-hmm.
you to withstand that hardship. So
Yeah.
be very careful of buying extended stocks when the market shifts and things are looking really strong. It can be very tempting because you're feeling like you're missing
Yeah.
out. But be very careful. Fight the FOMO.
Yes, totally agree with you there, Justin. Okay, let's also take a look at a defense name that's looking interesting. General Dynamics GD up 4% today to retake its 50-day line. Actionable here, want it to cross over that 250 level. But again, buying as close to a moving average before a stock gets extended, there's definitely a benefit to that.
Yeah, and again, it doesn't mean that you have to necessarily start with your full position. That's one of the things. If we're going to be buying before a follow-through day, sometimes what we're doing is we're doing pilot positions. So you can start with a half position or even a quarter position, just to kind of get your feet in the door. And then if you start seeing it cross those levels of resistance, then you can start adding. And it makes it so that your average cost stays at a reasonable level. Now, one thing that you have to be careful of is that you don't let your buying get out of control. If you maybe start with a smaller position and then you feel like you have to catch up because, hey, this is one of my winners and it's
Mm-hmm.
not moving the needle because I have too little in it. You don't want to make sure you don't go overboard and buy too much at a higher price, because that's going to move your average cost up and you're going to undo all of that kind of good process that you had at the beginning. So watch your average cost. Know that you can start some of these positions a little bit early and then follow up with buys as the market is telling you, hey, you're making good decisions.
Mm-hmm, exactly. And not only are we talking about strategies like that in great detail every morning on IBD Live, but on the podcast, we did an episode with Scott St. Clair not all too
Mhm.
long ago. Maybe it is. I mean, time flies.
It's getting to be
Maybe
about a
it has
year.
been a
Yeah.
while,
So,
but it was all about position sizing. I know
mhm.
you always cover such great topics on the podcast, and we have another one that's timely, but just a great tool for the arsenal that you and Chris will be digging into today.
Yeah, he got some data from one of our programmers, Praveen, who is a market enthusiast. So, yeah, he's going to share some of the data of what he found for some of these turns in the market and which stocks were the ones that were maybe the most deserving of attention.
Ah, so awesome. It's going to be a great one. Investors.com/podcast. Keep an eye for that drop tomorrow. Thanks so much, Justin. And thanks to everyone for tuning in. We'll see you right back here tomorrow.